Imagine waking up tomorrow and finding out that China has officially cut off all exports to the United States. No more iPhones assembled in Shenzhen. No cheap electronics on Amazon. No clothing tags that read "Made in China." Sounds like the plot of a dystopian movie, right? But what would actually happen if China stopped selling its products to America? Let's break it down. The immediate shock. First, the short-term chaos. Shelves in Walmart, Target, and Best Buy would start looking empty within weeks. Prices on everyday products like phones, TVs, clothes, furniture, even toys would skyrocket. American companies that rely on Chinese components like Apple, Tesla, and pharmaceutical firms would be in big trouble. Remember, about 18% of all goods America imports come from China. That's a huge chunk to suddenly lose. Consumers would feel it right away in their wallets. Supply chain breakdown. China isn't just selling finished products, it's selling the guts and parts that keep American factories running. Electronics rely on Chinese-made circuit boards and chips. Electric vehicles rely on Chinese batteries. Even critical medicines rely on Chinese active ingredients. Without those inputs, US factories wouldn't just slow down. They could literally grind to a halt. That means layoffs, production cuts, and huge pressure on companies to find new suppliers. Inflation and the economy. And here's the kicker. All of this would drive inflation through the roof. Imagine paying double for your laptop or triple for a solar panel. Gasoline and energy costs might rise too, since America would scramble to import from farther away. The stock market, it would tank, at least in the short run. Investors hate uncertainty, and losing America's #1 trade partner overnight would trigger panic selling. Medium-term adjustments. But here's the thing, America isn't helpless. Over the next year or two, supply chains would shift. Companies would look to countries like Vietnam, India, Mexico, or Indonesia for manufacturing. Some industries might even come back to American soil, thanks to government subsidies and reshoring programs. New trade deals would pop up fast. Washington would lean hard on allies to fill the gap. But make no mistake, this transition would be painful, expensive, and messy. Americans would get used to paying more for products they used to buy cheap. The bigger picture. Now let's zoom out. China would also take a massive hit. Remember, the US is one of China's biggest customers. Cutting America off would cost millions of Chinese jobs and slow down its economy. In other words, this would be an economic nuclear option, hurting both sides badly. It could even reshape global trade into two separate camps, a US-led supply chain and a China-led one. Think of it like a new Cold War, but instead of tanks and missiles, it's factories and shipping lanes. So what if China stopped selling to the US? Short term, chaos, shortages and skyrocketing prices. Medium term, America scrambles to rebuild supply chains. Long term, we'd probably see a world divided into two economic blocks. But here's the real question. Would China ever actually do it? Probably not, because the cost would be catastrophic for them too. Still, it's a powerful reminder of how interconnected our economies are and how fragile that balance really is. What do you think? Would America survive without Chinese goods? Or would it be the start of a global economic meltdown? Let me know in the comments, and don't forget to like, share, and subscribe for more deep dives into world affairs.